It's Sunday evening. You're sitting at your desk reviewing your trading week. You look at your trades and you see the same pattern again. You broke your rules. Again. You told yourself this week would be different. You promised yourself you'd follow your strategy perfectly. You wrote down your rules. You told yourself you'd stick to them no matter what. But by Tuesday, you had already broken rule number 1. By Wednesday, rule number 2 was gone too. And by Friday, you weren't even looking at your rules anymore. You were just trading based on feelings. Now it's Sunday, and you're disappointed in yourself. You're frustrated. You're wondering why you can't just follow the simple rules you created. The rules that you know work. The rules that you've tested. The rules that, if you followed them, would actually make you money. So, you make another promise to yourself. Next week will be different. Next week, you'll follow your rules perfectly. You mean it this time. But deep down, you know the truth. Next week will probably be the same. You'll break your rules again, you'll trade emotionally again, and you'll end the week disappointed again. This cycle, it's been going on for months, maybe even years, and you're starting to wonder if you'll ever be able to stick to your rules. Here's what you need to know. You're not alone. Almost every trader struggles with this exact problem, and there's a reason why sticking to rules is so hard. But more importantly, there's a solution. One simple change that can fix everything. If you're stuck in this frustrating cycle, you need to understand what's really happening. The reason isn't what you think. Let me tell you a story about a trader named Yale. Yale spent 6 months developing his trading strategy. He backtested it, practiced it on demo, perfected it. On paper, it was beautiful. A 60% win rate, 1-to-2 risk to reward. He should have been making consistent money. But in real trading, with real money, Yale was losing. Not a little, a lot. His account was down 30% after just 2 months. The confusing part was that the strategy still worked perfectly fine. The problem wasn't the system. The problem was Yale. Rule number 1. Only trade between 9 a.m. and 3 p.m. when the market is most active. But Yale would see a setup at 8 p.m. while watching Netflix and take it anyway. He'd tell himself, this one looks too good to miss. Rule number 2. Risk only 1% per trade. But after a loss, he'd get frustrated and risk 3%, sometimes 5%. Just this once, he'd say, I'll get it back. Rule number 3. Wait for 3 confirmations before entering. But when the price started moving, he would panic. If I wait for all 3, I'll miss the entry. So he'd jump in early. Yale wasn't stupid. He knew what he was doing wrong. He saw it every Sunday night while reviewing his week. He'd feel terrible, promise himself next week would be different, but it never was. And here's the truth. The reason Yale couldn't stick to his rules is the same reason you can't stick to yours. It has nothing to do with discipline or willpower. It's about how your brain works when you trade. When you create your rules, you're calm. No money on the line, rational brain in charge. You're logical, patient, and smart. You think long-term. You understand probability. You make perfect sense on paper. But once real money is involved, everything changes. Suddenly, your emotional brain takes control. It doesn't care about logic. It doesn't care about your long-term goals. It only cares about how you feel right now. When you see a trade outside your hours, your rational brain whispers, "Don't take it." But your emotional brain screams, "This looks amazing! You'll miss out if you don't act now." And because emotion screams louder than logic, emotion wins. After a loss, your rational brain says, "Stick to your plan." But your emotional brain yells, "Get your money back! You can't end the day red." Emotion wins again. This happens over and over, day after day, week after week. Not because you're weak, not because you lack discipline, but because your brain evolved this way. Your brain was built to protect you from danger. Fear made your ancestors run from lions. Greed made them grab food before someone else did. But in trading, those same instincts destroy you. Fear makes you close winners too early. Greed makes you chase bad setups. Panic makes you break your rules. And no amount of willpower can override millions of years of evolution. That's the real reason why you keep breaking your trading rules.
Understanding why you break your rules is important, but it still leaves one big question. Why doesn't trying harder actually fix the problem? Most traders think the solution to breaking rules is more willpower. They think, I just need to be more disciplined. I just need to try harder. I just need to force myself to follow my rules. I just need to want it more. So they try harder. They make bigger promises to themselves. They write their rules on sticky notes and plaster them all over their monitor. They set their rules as their phone wallpaper. They tell their friends and family about their commitment to following their rules. They start the week with tremendous motivation. Monday morning, they're ready. They're focused. They're determined. This week will be different. Monday goes well. They follow their rules perfectly. They feel great about it. Tuesday, they follow their rules again. They're building confidence. They're thinking, I finally figured this out. But then Wednesday comes. A perfect-looking setup appears at 7 p.m. Yale stares at his screen. His rules say he shouldn't trade after 3 p.m., but this setup looks incredible. The price is breaking out of a major resistance. Every indicator is aligned. This looks like the easiest money he's ever seen. Yale fights with himself. He reminds himself of his rule. He looks at the sticky note on his monitor that says only trade 9 a.m. to 3 p.m. He thinks about his promise to himself. He resists for 5 minutes. The price keeps moving. Yale's heart is racing. He's sweating. He's thinking about all the money he could make on this trade. He's thinking about missing this opportunity. He resists for 10 minutes. His hands are shaking. His breathing is faster. Every part of his body is telling him to take this trade. 15 minutes. The price has moved even more. Yale is thinking about how much money he's already missed by not taking the trade earlier. Finally, he breaks. He can't take it anymore. He clicks the buy button. He takes the trade. His willpower is exhausted. The trade ends up losing money because trades outside his strategy hours have a lower win rate. That's why the rule existed in the first place. But Yale didn't think about that. He was too busy fighting his emotions. This is why willpower doesn't work, because willpower is a limited resource. Willpower gets tired. Willpower gets weaker throughout the day. Willpower fails when emotions get strong. Think about it this way. Imagine you're on a diet. You tell yourself you won't eat dessert. You have great willpower in the morning. You skip the donuts at work. You're doing great. But then evening comes. You're tired from work. You're stressed. You walk into your kitchen and someone has left a delicious chocolate cake on the counter. The cake smells amazing. It looks amazing. You're hungry and tired. How long can you resist? Maybe you resist for 5 minutes. Maybe you resist for 30. Maybe you even resist for an hour. But eventually, your willpower breaks. You eat the cake, not because you're weak, not because you don't care about your diet, but because willpower has limits. Willpower runs out. And trading is exactly the same. You tell yourself you'll follow your rules. You have great willpower in the morning. You follow your rules for the first trade, maybe for the second trade too. You're doing great. But then the market presents you with a tempting setup outside your rules. The setup looks perfect. You're afraid you'll miss out. Your emotions are screaming at you to take the trade. You're tired from focusing all day. Your willpower is depleted. How long can you resist? Maybe you resist for one trade. Maybe you resist for one day. But eventually, your willpower breaks. You take the trade outside your rules. You risk too much. You enter without proper confirmation. Not because you're weak, not because you don't care about your rules, but because willpower has limits. Willpower runs out. And when willpower runs out, emotions take over. This is why traders can follow their rules perfectly for a day or two and then break them completely by the end of the week. It's not that they stopped caring, it's not that they gave up, it's that their willpower got exhausted. And here's the worst part. Every time you use willpower to resist breaking a rule, you're using up your limited supply. By the end of the day, you have no willpower left, so the last trade of the day is the one where you're most likely to break your rules. Yale experienced this constantly. He'd start his trading day with strong discipline, he'd follow his rules for the first few trades, but by the end of the day, he was breaking rules left and right. Not because he stopped caring, but because he'd used up all his willpower resisting earlier in the day. Scientists call this decision fatigue and ego depletion. The more decisions you make, the more tired your brain gets. The more you resist temptation, the weaker your resistance becomes. This is why relying on willpower to follow your trading rules is a losing strategy. You're setting yourself up for failure. You're asking your brain to do something it's not designed to do.
Once you understand that willpower fails, you can start noticing something important about your rule breaking that reveals the path to the solution. Here's something interesting that most traders don't notice about themselves. They don't break all their rules. They break specific rules, the same rules, over and over and over. Yale didn't break every rule in his strategy. There were many rules he followed perfectly, almost without thinking about them. Yale always used stop losses, every single trade. He never forgot, he never skipped it. This rule was automatic for him. Yale never risked more than 5% on a single trade. Even when he broke his 1% rule, he still stayed under 5%. This was his absolute maximum, and he never violated it. Yale always checked the economic calendar before trading. He never traded during major news events. This rule was easy for him to follow. But there were 3 specific rules that Yale broke constantly, repeatedly, predictably. Rule 1. Only trade between 9 a.m. and 3 p.m. Yale broke this rule at least once a week, sometimes multiple times per week. Rule 2. Risk only 1% per trade. Yale broke this rule after almost every losing trade. Rule 3. Wait for 3 confirmations before entering. Yale broke this rule whenever he saw the price starting to move quickly. These weren't random, these were patterns. And these patterns reveal something critical about what was happening in Yale's brain. Let's look deeper at each pattern. When did Yale break the trading hours rule? Always in the evening or late at night, never in the morning. And it always happened when Yale was scrolling through his phone or watching his charts just to see what's happening outside his trading hours. The emotional trigger was FOMO, fear of missing out. Yale would see a setup and think, everyone else is trading this right now and making money. If I don't take it, I'm losing money by doing nothing. When did Yale break the risk only 1% rule? Always immediately after a losing trade, never after a winning trade, never at the start of the day, always after a loss. The emotional trigger was desperation and revenge. Yale would think, I just lost money. I feel terrible. I need to get it back right now. If I risk more, I can recover faster and stop feeling bad. When did Yale break the 3 confirmations rule? Always when the price was moving fast, never when the price was moving slowly. Always when Yale felt excited and saw the candles pumping up or down quickly. The emotional trigger was excitement and greed. Yale would think, This is moving so fast, if I wait for all three confirmations, I'll miss the entry. I need to get in now. Every rule Yale broke had an emotional trigger behind it. And once Yale identified these triggers, he could create a solution. This is true for you too. If you look at your trading honestly, if you review your last 50 trades and really analyze them, you'll notice that you don't break all your rules. You break specific rules, the same rules, in the same situations. Maybe you always break your rules when you're afraid of missing out. Maybe you break them when you're trying to recover from a loss. Maybe you break them when you're excited. Maybe you break them when you're bored. But there's always an emotion behind it. There's always a trigger. There's always a pattern. And understanding your pattern is the first step to fixing the problem. Because once you know your pattern, once you know your emotional triggers, you can stop trying to fight them with willpower. Instead, you can create a system that removes the opportunity to act on these emotions. Now that you understand the pattern and the emotional triggers behind your rule breaking, we can finally talk about the solution that actually works. The change is this: stop trying to control your emotions. Stop trying to build more willpower. Stop trying to be more disciplined. Instead, remove the opportunity to break your rules. Let me explain what this means using Yale's example. Yale kept trading outside his hours. We identified that the emotional trigger was FOMO. He'd see a setup in the evening and couldn't resist taking it. First, we tried the traditional approach. We had Yale use willpower to resist. We had him write reminders. We had him set alarms that would remind him not to trade after 3 p.m. None of it worked. By the third day, Yale was trading after hours again. Then we tried something completely different. We stopped trying to control Yale's emotions or build his willpower. Instead, we removed the opportunity to break the rule. Here's what we did. We had Yale set an alarm on his phone for 3 p.m. Not as a reminder, as a trigger for action. When the alarm rang at 3 p.m., Yale had to do one thing: close his trading platform completely. Not minimize it, not leave it running in the background. Close it completely. Shut down the program. The first day, Yale didn't want to do this. At 3 p.m., he wanted to keep his platform open just to watch the markets. He wanted to keep his charts visible just in case a good setup appeared. He wasn't planning to trade. He just wanted to watch. But we insisted. Close the platform. Close the computer. Walk away.
Yale reluctantly did it. He closed his platform. He felt uncomfortable about it, like he was missing out on something. That evening, at 7 p.m., Yale was watching TV. His phone buzzed with a price alert. The Euro-USD was breaking out of a major level. Yale's heart jumped. This was exactly the kind of setup he loved to trade. Normally, Yale would have immediately rushed to his computer, opened his platform, and taken the trade. His FOMO would have been too strong to resist. But this time, something was different. His computer was off. His trading platform was closed. To take this trade, Yale would have to get up from the couch, walk to his office, turn on his computer, wait for it to boot up, open his trading platform, wait for it to load, log into his account, find the pair, analyze the setup, place the trade. That's a lot of steps. That's a lot of friction. By the time Yale thought about all these steps, something happened. The emotional impulse started to fade. Yale sat on the couch for a moment. He thought about getting up. He thought about the setup. But the immediate emotional intensity had passed. The FOMO was still there, but it wasn't as overwhelming. Yale decided to just check the setup on his phone. He looked at the chart on his mobile app. And from that calmer perspective, he noticed something. The setup wasn't actually that great. The volume was low. The breakout looked weak. This probably wasn't going to work. Yale didn't take the trade. Not because he used willpower, not because he fought his emotions, but because we removed the opportunity. We created friction, and that friction was enough to break the impulse. Over the next 2 weeks, this approach saved Yale from taking at least 5 trades outside his hours. Trades that, when he reviewed them later, were all low-quality setups that would have lost money. The rule breaking stopped, not because Yale became more disciplined, but because we removed the opportunity to break the rule. This worked so well that we applied the same principle to Yale's other problem rules. For the position sizing problem, where Yale would increase his risk after losses, we created a pre-trading ritual. Every morning, before Yale started trading, he would calculate his exact position size for the day. He would write it down on a piece of paper and place it next to his monitor. The number was calculated as 1% of his current account balance. That was his position size for every trade that day. No exceptions, no adjustments, no increases after losses. If Yale wanted to change the position size, he would have to recalculate it, which meant getting out a calculator, doing the math, updating the number on his paper. That friction was enough to stop the impulse to increase risk after losses. For the confirmation problem, where Yale would enter trades early when the price was moving fast, we created a physical checklist. Yale printed out a simple checklist with 3 boxes: moving average crossover confirmed, RSI confirmation present, candlestick pattern completed. Before Yale could take any trade, he had to physically check all 3 boxes with a pen. He had to look at each indicator. He had to verify each confirmation. He couldn't take the trade until all 3 boxes were checked. This simple physical checklist forced Yale to slow down. Even when the price was moving fast and his excitement was high, he had to go through the checklist. And going through the checklist took about 30 seconds. Those 30 seconds were enough to calm the emotional impulse. Those 30 seconds gave his rational brain time to catch up with his emotional brain. And often, when Yale finished the checklist, he realized the setup wasn't actually complete yet, or he noticed a problem he hadn't seen in his initial excitement. Within 2 weeks of implementing these changes, something remarkable happened. Yale stopped breaking his rules. Not completely, not perfectly, but dramatically. He went from breaking rules multiple times per week to maybe once every 2 weeks. And when he did break a rule, it was much less severe. Instead of risking 5% after a loss, he might risk 1.5%. Instead of trading 4 hours outside his window, he might trade 30 minutes outside. The transformation wasn't about Yale becoming more disciplined. It was about removing opportunities and creating friction. Yale's story shows it works. But now you need to know exactly how to implement this approach in your own trading, step by step. This same approach can work for you, but you need to be systematic about it. You need to follow a clear process. Here's exactly how to do it. Step 1. Identify which rules you keep breaking. Don't be general. Don't just say, I break my rules sometimes. Be specific. Be honest. Write down the exact rules you break most often. Look at your last 50 trades. Go through them one by one. For each trade, ask yourself, did I follow all my rules? If not, which rule did I break? Write down every rule violation. You'll start to see patterns. You might discover that you break the same 2-3 rules repeatedly, while you follow all your other rules consistently. Those 2-3 rules are your problem rules. Those are the ones we need to fix. Step 2. Identify the emotional trigger for each problem rule. For each rule you keep breaking, dig deeper. Ask yourself, when do I break this rule? What situation am I in? What am I feeling? Be specific. Is it fear? Is it greed? Is it FOMO? Is it desperation? Is it boredom? Is it excitement? Is it revenge? Write down the emotion. Write down the situation. For example, I break my trading hours rule when I'm bored in the evening and I'm scrolling through charts on my phone. The emotion is FOMO. I break my position sizing rule right after I take a loss. The emotion is desperation and revenge. I break my confirmation rule when the price is moving fast. The emotion is excitement and fear of missing out. Understanding your emotional trigger is crucial because it tells you what situation you need to protect yourself from. Step 3. Remove the opportunity. For each problem rule, create a physical barrier or system that makes it harder to break the rule. Don't rely on willpower. Don't rely on reminders. Create actual friction. The key is to make breaking the rule require multiple steps. Make it inconvenient. Make it require effort, because that effort is usually enough to break the emotional impulse. Let me give you specific examples for common rule-breaking scenarios. If you trade outside your designated hours, set an alarm for the end of your trading window. When it rings, close your trading platform completely. Better yet, shut down your computer. If you really want to be serious, unplug your monitor and put your mouse in a drawer. Remove your trading apps from your phone. Don't check charts outside your trading hours. Don't watch the markets just for fun. The goal is to create a hard boundary. Once your trading day ends, trading becomes inaccessible until tomorrow. If you enter trades without proper confirmation, create a physical checklist on paper. List every confirmation your strategy requires. Before you can take any trade, you must check every box with a pen. Keep this checklist right next to your mouse. Make it impossible to click the buy button without completing the checklist first. Some traders even create a laminated checklist and use a dry erase marker so they can reuse it for every trade. If you risk too much per trade, calculate your position size before you start trading each day. Write it down on a sticky note. Put the sticky note on your monitor. That number doesn't change all day, no matter what happens. No matter how you feel, no matter if you win or lose, the number stays the same. If you want to be extra careful, set up your trading platform to default to that exact position size. Make changing it require multiple clicks and confirmations. If you take revenge trades after losses, create a mandatory cooling off period. After any losing trade, you must wait 30 minutes before taking another trade. Set a timer. Make it visible. During those 30 minutes, close your charts. Do something else. Go for a walk. Make coffee. Read something. Watch a video. Anything except looking at your trading platform. Only after the timer goes off can you look at charts again. And before you take a trade, you must complete your entry checklist. If you move your stop loss or exit too early, set your stop loss and take profit levels as soon as you enter the trade. Then, close your trading platform. Don't watch the trade. Set an alert to notify you when the trade closes. Only then can you open your platform to see the result.
If you absolutely must watch your trades, cover the profit and loss number with a piece of paper or tape. You can see the chart and price, but you can't see how much money you're making or losing. This reduces the emotional impact. If you overtrade because you're bored, limit your number of trades per day. Decide in advance, I will take a maximum of 3 trades today. After 3 trades, I close my platform, win or lose. Use physical tokens. Get 3 poker chips. Each chip represents 1 trade. When you take a trade, remove 1 chip. When all chips are gone, you're done for the day. This physical representation makes the limit real and visible. If you hold losing trades too long, hoping they'll come back, use a maximum daily loss limit. Decide before you start trading. If I lose X dollars today, I stop trading immediately. When you hit that loss, close your platform, walk away. You're done for the day. No exceptions. Some trading platforms let you set this as an auto stop. Use it. The key principle behind all of these solutions is the same. Don't fight your emotions. You can't win that fight. Emotions are too strong, especially when money is involved. Instead, remove the opportunity to act on your emotions. Create friction. Create barriers. Make breaking your rules inconvenient. That small amount of inconvenience is usually enough to break the emotional impulse. By the time you've gone through the extra steps, your rational brain has time to catch up and stop you.
These steps might seem simple, almost too simple, but there's a deep psychological reason why this approach succeeds where willpower and motivation constantly fail. This approach works because it's based on how the human brain actually works, not on how we wish it worked. When you rely on willpower, you're asking your rational brain to overpower your emotional brain. That's like asking a librarian to win a fight against a UFC fighter. The rational brain is smart, but the emotional brain is stronger, especially when money's involved. But when you remove the opportunity to break your rules, you're not fighting your emotions at all. You're not asking your rational brain to be stronger, you're just making it harder to act on the emotional impulse. You're adding friction, and friction is incredibly powerful at changing behavior. Think about this. If there's a jar of cookies sitting on your kitchen counter, you'll eat cookies all day long. Every time you walk by, you'll grab one. It's easy, it's convenient. You barely even think about it. But if the cookies are in the basement, in a locked cabinet, and you have to go downstairs, find the key, unlock it, grab one, lock it again, walk back upstairs, you'll eat way fewer cookies. Not because you suddenly have more willpower, not because you want cookies less, but because the friction of getting the cookies is enough to break the impulse. Most of the time, when you think, I want a cookie, but the cookies are in that locked cabinet, you just don't bother. The desire fades, the impulse passes, you move on. Trading is exactly the same. If your trading platform is always open, your charts always visible, and you can take a trade with 1 click, you'll break your rules constantly. Not because you want to, not because you're undisciplined, but because it's easy, it's convenient, there's no friction. But when you close your platform, if you need multiple steps to place a trade or a checklist to complete first, that friction changes everything. When the impulse to break a rule hits you, but breaking it requires effort, something interesting happens. You pause. You think. Your rational brain gets a chance to catch up. And by the time you go through those extra steps, the emotional impulse is gone. You realize the trade isn't that good. You realize you were about to break your rules for no reason. You stop yourself. That's why this works, when willpower doesn't. It's not about being stronger. It's about being smarter. You can't always control your emotions,
but you can control your environment. And environmental design is more powerful than willpower. This is why people who want to lose weight don't keep junk food at home. Why people who want to save money delete shopping apps. Why people who want to quit drinking don't go to bars. They don't rely on willpower. They remove temptation. They change their environment. You need to do the same with your trading. Change your environment, remove opportunities, create friction. Because when you do, following your rules becomes easier, not because you're more disciplined, but because breaking them becomes harder.
Understanding the theory is one thing, but seeing the actual results brings everything together. Let me show you what happened when Yale fully committed to this approach. In his first week using the new system, something remarkable happened. Yale followed his rules 90% of the time. Not perfect, but massively better than before. He broke his trading hours rule just once that week. And even that one time, he only traded 30 minutes outside his window, instead of 3 to 4 hours like he used to. He didn't break his position sizing rule at all. Even after losses, he stuck to his pre-calculated position size because changing it would have required recalculating, which was just enough friction to stop the impulse. He broke his confirmation rule twice, but both times he caught himself halfway through the checklist and realized he didn't have all 3 confirmations yet. Yale couldn't believe it. After months of struggling, after months of breaking his rules and hating himself for it, he had finally found something that worked. In his second week, he followed his rules 95% of the time. The only rule he broke was entering one trade with just 2 confirmations instead of 3. But even that trade followed all his other rules, so the violation was minor. By the end of the first month, Yale was following his rules almost perfectly. He had a few minor violations, but nothing compared to before. He wasn't taking revenge trades, he wasn't trading outside his hours, he wasn't risking too much. And here's what's really interesting. Yale's trading results completely transformed. Before implementing this system, Yale's strategy had a 60% win rate in backtesting, but in live trading, Yale's actual win rate was only 45% because he kept breaking his rules and taking bad trades. After implementing this system, Yale's win rate actually dropped to 55%, still lower than the backtest, which is normal, but much better than before. But despite the lower win rate, Yale started making real, consistent money. Why? Because he was actually trading his strategy now. He was letting his edge play out. He wasn't sabotaging himself with emotional trades. Before, Yale would have a good trade that made $200, then take a revenge trade that lost $300, then overtrade and lose another $200. His good trades were being canceled out by his bad trades. After, Yale would have a good trade that made $200, then stop trading because he'd hit his daily trade limit, or because he didn't see any more setups that met all his criteria. The good trades accumulated, the bad trades stopped. Within 3 months, Yale's account had grown 18%. This might not sound exciting compared to the 100% monthly returns that some gurus promise, but for Yale, it was life-changing. He had never had 3 consecutive profitable months in his entire trading career. Within 6 months, Yale's account had grown 32%. But more important than the money was how Yale felt about trading. He wasn't stressed anymore, he wasn't hating himself anymore, he wasn't fighting against himself anymore. Trading became easier, not because the market got easier, not because Yale found some magic strategy, but because Yale wasn't fighting against himself anymore. He had systems, he had barriers, he had friction. He didn't rely on willpower, so he didn't get exhausted. He didn't rely on motivation, so he didn't burn out. Yale showed up every day, followed his systems, and let his strategy work. Some days he made money, some days he lost money, but over time, the edge played out, and his account grew steadily. By the end of his first year using this approach, Yale had grown his account 47%. But more important than the money was how Yale felt about trading. He wasn't stressed anymore, he wasn't hating himself anymore, he wasn't fighting against himself anymore. So here's the truth. You don't need to become some super disciplined, emotionless trading robot. You just need to stop giving your emotional brain an open bar and free Wi-Fi access to your trading account. The key isn't to fight your emotions, it's to outsmart them. Because let's be honest, you're not going to suddenly wake up one day with infinite willpower. You can't. None of us can. We're emotional creatures pretending to be rational traders. So instead of trying to be perfect, design your trading around the fact that you're human. Add friction. Make the dumb decisions harder to do. Shut the computer. Use the checklist. Unplug the monitor if you have to. Because at the end of the day, trading isn't a battle against the market. It's a battle against yourself. And the funny part is, the market doesn't even care who wins. So stop trying to trade like a superhero. Trade like a human, a smart human who knows how to protect himself from himself.